the whole syndication and multifamily is leverage. So partnerships, I mean, we've made a lot of new friends and a lot of new partners in this journey, because it's, you know, how much work is involved, obviously, to tackle one. And so to divvy up the roles, to divvy up the experience, and it's fun because everyone has their own unique skill sets that they can bring to the table. And so it is teamwork makes the dream work. And
So this is episode 68 of Keeping It Real Estate. Today we have Hoa Nguyen on the show. And I met Hoa about 4 years ago through a real estate group that we're both a part of down in Dallas, Texas. And, you know, I just wanted to say personally, I've been so impressed with your drive. I've been impressed with how you've been able to scale your business. And not only that, I've been really impressed on how you and your husband have given back to your community. So super excited to dive into this show. A little bit more about Hoa. She's invested in over 7,300 units as a GP and LP. She owns 2 successful eye practices and is a co-founder of Blacksteel Investment Group. So with that, Hoa, welcome to the show.
thank you so much. You and Dan are killing it. So you guys are great inspiration, seeing your path as well.
Well,
thank you for having me on.
I appreciate that very much. So let's go ahead and dive into it. I'd love for you to share with the listeners a little bit about your background, you know, professionally before you got into real estate, and then you could also walk us through a little bit on how you got into real estate as well.
Yeah, absolutely. So by trade, Jaime and I are both eye doctors. We're optometrists, so I met him in school, and that was, crazy to say, we've been practicing for 17 years.
Wow.
But you know, so we have 2 private practices. But it was hustle and bustle. I mean, obviously a lot of trading time for money to build your own practices and business. I think you definitely put in a lot more hours when it's your own business than just working for someone else. And so we did that for the first 4.5 years working for someone else. Then we purchased our own 2 practices, and then hustled and working, building that up. And honestly, the whole journey of real estate really came into fruition because my daughter was born. And so, you know, 2014, you know, Athena was born. And then once she was born, I was like, okay, I told Jaime, we really need to look at other things to diversify, and have some other streams of income, because ultimately I wanted also to be a mom. I wanted to be a good mom, but I also loved my career, but I needed to buy back some more flexibility in time. And I've always been driven. I'm not scared of hard work. I'm willing to put in the work. And so I knew real estate was the vehicle of building wealth. And so that was a whole nother journey of going on different, a whole nother form of education and networking and learning to get into the real estate business. But we started 2015 was when we started our real estate journey.
Got it. That's fantastic. And how did you find real estate? So it sounded like you said, you know, you knew real estate was a good way to diversify and to build some passive income. Were there, you know, certain books that you read, or did you have someone that, you know, was influencing you throughout your life that, you know, made you aware of that?
Yeah. So as far as role models, there was nobody in Jaime's or my life that was in real estate or in that path that we could ask questions. So it was really the world of the internet. You know, you start Googling and then it takes you down different rabbit holes. And there's so many asset classes in the world of real estate, right? And so our journey into learning real estate was not easy by any means. You know, we did absolutely find communities like Bigger Pockets, and then we started talking to people there. Any local events that would host, we would Google, okay, local meetups or real estate boot camps or events. And so we kind of learned different things of that nature. And then, you know, by chance, we decided to do a girls trip. And it was just funny because I went to Belize and Jaime suggested we scope out an island in Belize. And that was 2015. And so our real estate journey actually started buying, was in another country. We started buying land and building an Airbnb and invested in foreign properties before we actually started investing into the US, just because we saw the potential of growth there. In hindsight, would I have done it differently? Absolutely. But that was our journey of how we started, was
Got it. And the foreign properties, so it sounds like you no longer invest in foreign land or acquisitions. What did you like about that asset class? And, what led you into multifamily instead of that?
Yeah. So, when you buy overseas, especially in Belize, financing is extremely high interest rate. And so back then it was 13 to 14%. And so, and some of them, if you're building out and you're like, we did new construction build out, they
Mhm.
didn't allow financing. And so it was really all cash. And so at that point, we didn't have investors, or we didn't even do partnerships because we were new. And so we kind of wanted to venture and do our own thing. And so we parked a lot of cash up front, buying land and doing the build out and picking the whole construction team and the interior design team. It was really fun because for us it was a legacy asset. We didn't see this as something that we would hold short term. It was
Mhm.
something that was going to be forever. We were going to hold it. We were going to retire there. And so that was something we were building a nest, because we knew we were buying it cheap then versus what it's appreciated to now. But there was no cash flow. There's absolutely no tax there's no tax advantages. It was all upfront capital. We weren't leveraging debt or other investors. So once we learned about the model of syndication, and honestly, it was a patient of ours who, we were so excited about the whole world of real estate and what we were doing. And they're like, have you considered a syndication model? And I was like, well, what's that? And so that's when we learned about apartment multifamily syndications, because we never figured we could afford to get our foot in the door in the multifamily space. So we were looking at 4 units, 8 units, 12 units, multifamily on a small scale, where we
Mhm.
were doing it by ourselves. But once we learned about multifamily syndication, that was a game changer, because then we just started passively investing to learn the ropes and joining mentorship groups and networking and learning the business before we transitioned to doing that fully.
Got it. I love it. And it sounds like you started out passively investing and learning the ropes, seeing what other general partners were doing, before you jumped into the general partnership role. Was that correct?
Absolutely. We did 8 passive deals before we transitioned to being a GP, just because just to learn the ropes and feel comfortable enough to transition to do that.
Got it. I love that. And I love going back a little bit. I love how you were operating your eye practices and you were sharing a little bit about what you were interested in, that you're interested in real estate with your clients. And that opportunity came up from one of your clients, or you learned about syndication because you were sharing that information. That's just so unique. And I think, for anyone out there, if you have interest in something, talk about it a little bit, and you just never know when the opportunities are going to pop up.
That's true.
So you're managing 2 eye practices and obviously doing the multifamily now as well. Very busy. How do you manage your time in between the two?
So I actually have a lot more time now than I did when I was working just doing my practices, because as I transitioned into the real estate world, because before Jaime and I were the sole doctors in our 2 practices.
Okay.
And then gradually, as we were getting more cash flow and transitioned into the real estate space, we started hiring more doctors. And so honestly, I go in maybe 2 to 3 times a month in my practice seeing patients. And so um, I honestly, my practices don't really need me anymore. It fully operates without us, both of us, but we obviously still love seeing our patients who we've been seeing for 17, 18 years, who request to see us. So honestly, the few days that we go in are by request only, established patients. And then we hire a lot of help, even in our real estate business, as we've transitioned over and we've gotten busier. It's the master of delegation. And so we've hired on team members to help us. Anything that doesn't really require me to do it or Jaime to do it, we've hired out, just because we figure what's the best use of our time, what's our skill set, what do we actually enjoy doing, and high level, that's what we concentrate, and that's how we've been able to scale. And actually, I time block, and so my priority is spending time with my family, and so everything revolves around that. Yes, there are things that come up where that takes, priority, but most of the things that we do can be scheduled and planned, whether it's investor calls, whether it's touring a property, whether it's a conference or whatnot. Those are things that can be pre-planned that I can work around, or I can prioritize my time. And so when you break out, I used to work 60 hours a week on average in my business. My work week now averages about 8 to 16 hours.
Wow, that's incredible.
Mm-hmm.
That really is. And I mean, that very, very good information that you just shared. I mean, I heard you say time blocking, which is just crucial if you want to spend more time doing the tasks that you really enjoy or spending time with your family. So I'd like to dive into that more, but also leveraging other people's time. And then I loved when you mentioned you look at what tasks or what jobs do you actually enjoy doing and trying to focus more time on that. I think that's just so important. Circling back to time blocking, is there a certain way that you do that? Do you allocate a certain amount of hours, to family and to your iPractice business and real estate, or is it always shifting around?
It's shifting depending on if we have an active project or what's going on with conferences and things. But, I see your Build Your Life resume back there with Jesse Itzler. And so we do a heavily planned big rock, we call them like kind of our rock items. Mm-hmm. And so major things that we want to implement into our calendar, we do a year in advance planning. And so all our family vacations, all the major conferences, all the immersion trips for self-development, personal development, family vacations, anniversary trips, birthday trips, all of that's pre-planned into the schedule in advance, right? And then as we're taking on projects, then we kind of go down into the minutia and granular level. What are we focusing on this month? What are we doing on a weekly basis? And so we allocate, say, our weekly meetings for our team, for our eye care practices. And then we allocate time where it's weekly for high level for our real estate. And so we have one person in charge of each business under us that's going to allocate and delegate those major tasks. But we always have high level meetings at the beginning of the week. So we want to know what is our goals, what are we trying to achieve? And then on daily tasks, then I time block and break that out. Dinner time is a must for my family unless I am traveling. We really value that. Weekends are really super important for us to go visit our parents, to be with our immediate family. Of course, if there's a conference or whatnot, then that's a different situation, but that's already pre-planned, right? And so it goes from a high level down to a granular level. So my calendar is color coordinated accordingly. So Jaime and I sit down on a high level, we plan out what we want to do. And then our fun, we always plan in our fun to kind of have something else to kind of look forward to, because we travel a ton and we love to travel and vacation too. But if you don't plan it in, then the busy, always takes over.
Exactly. You have all those daily tasks that seem to take over your schedule if you don't do that time blocking. So I appreciate you sharing a little bit more about that. I'd love to jump in a little bit deeper into multifamily. And, obviously you found that niche, you've been very focused on it. What about multifamily has really drawn you to that asset class? And what do you really love about it for you and your passive investors?
Yeah. So I absolutely love the syndication model because it has, from a passive investor side and from a GP side, it really opens the pool of possibility, especially for a lot of our doctor friends. We have very diverse investors, obviously, but a lot of them are busy. They're just like me, like Jaime and I were, right? Had I known about that asset class, even if we never ventured into actively getting into the real estate space, there's a lot of entrepreneurs and business owners and doctors who have disposable cash from their businesses. And we just park it in our 401k or stock market, or just put it in a savings account because we don't know other vehicles of growth. And so had I known this vehicle was out there, I would have invested even earlier. And now it's kind of like with this knowledge and knowing my whole journey. So I love like sharing that with the community and other peers. And, because that's the beauty of it is leveraging other people's experience, right? It's leverage. The whole syndication in multifamily is leverage. So partnerships, we've made a lot of new friends and a lot of new partners in this journey, because it's, how much work is involved, obviously, to tackle one. And so to divvy up the roles, to divvy up the experience, And it's fun because everyone has their own unique skill sets that they can bring to the table. And so it is teamwork makes the dream work. And I that's why I love this model, because when we were trying to do real estate on our own and figure it out, I mean, it's a nightmare. It's like you're trying to figure it all out, and it can get lonely, but when you have when you have an ecosystem of partners and friends to share resources during not just good times, but during bad times, through challenging times, what are you doing? What do you see? What's going on, right? It really helps, elevate each other and help each other in the journey. And that's why I love this whole multifamily space.
Yeah, I couldn't agree more with you. I mean, just being able to partner with others, that might complement your skill set, but not only that you can bounce ideas off of, that you can, stay motivated. I did the same thing as you. I was investing in single family rental properties all by myself. And I thought that was the way to go, make it easier on yourself, do it all yourself. You can, do it how you want. And I was so wrong. So yeah, I agree with you, Hoa. That's very, very true.
Yeah. I'm like, why did they not teach me this earlier?
Exactly. And I love how you mentioned, there's a lot of busy professionals and business owners and doctors out there. And I think there's a lot of people that are enjoying their career and they plan on doing it for 10, 20, 30 years, but they want to get a better return on their money, or maybe they want to have a safer return where, the stock market isn't going up and down 20, 30%. And I think, multifamily is just a great avenue to build wealth and passive income.
And you know what, even with, I know you mentioned that's a key factor, the volatility, right? Even for some investors, even if the return wasn't as great or whatnot, the wealth preservation it's a huge factor for a lot of people, right? Just don't lose the money,
Exactly. If you buy a good multifamily asset, you have good debt on it, a good team. I mean, you're pretty much bound to go up. I'd love to hear a little bit about, challenges that you've seen over the years, whether it be with your eye practice or multifamily, and how you overcame those challenges.
So challenges, COVID was a perfect time to talk about challenges. I mean, it's not too far out of reach. So perfect example, March 2020, literally our eye care practices, we were forced to close. Now imagine we have 15 staff members, right? Wow. And closing 2 practices for almost 7 weeks. So no income coming in from our practices. Had we not been prepared and have multiple streams of income and have a nest egg, we continue paying our staff, right? They couldn't come in. We couldn't open our doors. And then, so our asset classes from Belize, everything stopped, right? So there's a resort we're invested in, and then our Airbnb. We were fully booked in our Airbnb. All of those got canceled, and Belize was closed for 9 months. So now the resort has no money coming in. Now there's no money coming in from our home. There's no money coming in from our practices.
Oh, painful.
Most distributions for apartments stopped during COVID, right?
Yeah.
But we knew, so a part of that, the fortunate thing was, we always knew, like, we kept hearing winter is coming. And so we did have a nest egg. So we knew if something was to come that we would have some cash ready to deploy. And fortunately, we had that, because even applying for the PPP loan, that took forever, because first round, we couldn't get through to that. We had to wait for the second round. And so just waiting for the logistics of all of the loan. And so it was a challenging time. I mean, we stayed home for 2 months, but we maximized. What we did was, even though we knew we couldn't get out physically as much, and be in our practice, we utilized that time to strategically. 2020, we faced the most challenges, but 2020 was our biggest growth year, because we bounced back. We used those 2 months to make a list of, hey, let's call up investors, let's talk and educate people, let's talk to brokers, let's keep in touch with lenders so we know what's going on in the market. We knew once the market was backing up, because we had 2 deals under contract during March that fell apart because of COVID, because of the rising interest rates and volatility. And so we were facing a lot of different things, and that was not, it was a challenging time, but we learned a ton through that process. And then when we bounced back and got into the game into 2020, once the market kind of leveled out and there was a little bit less volatility with the lending, we started buying, and we had exponential growth in both our practices and during our real estate, because we started pivoting on a high level. Once things opened back up strategically, what do Jaime and I need to start focusing our energy on? And so those 2 months, even though we didn't make money per se, those were the best 2 months for us to re-strategize what we were going to do once we got back up and going.
I love that. And, it makes me think of something that Tony Robbins always says at his events, that, about 60% of large companies start in the winter period of the economy. So when there's a downfall in the economy, and that's, kind of what you guys did. You built up your businesses during the winter, and yeah, it was tough, but you strategized, you made it through, and you're that much stronger coming out. So, kudos to you. That's fantastic. Wow.
Thank you.
Yeah, you bet. So I'd love for you to, I think there's a lot of listeners on here that might be looking to get into real estate, or maybe they want to be a general partner like you've done. Any insights or advice that you can give to aspiring real estate investors and entrepreneurs out there?
I can't stress the education and the networking, but taking action, I think, is key. Yes, you do have to get educated, but I think what people wind up doing, and I see this a lot, is people go to a lot of conferences, take tons of notes, pass out a bunch of business cards, but they don't move the needle because there's not enough action involved with the learning. And so for me, it has to be in conjunction. So what I say is every single event, because for me, my time is my most valuable asset, as is yours, as is everybody else's. And so when you're investing money and time into these events, or whether it's a mentorship, whether it's whatever, a local meetup, you want to make sure that you write down 3 to 5 items, action items that you do right away. And follow, not just following up, but following through and making strong connections. You can't connect with everybody, obviously, but even if you picked 5 people or 10 people that you're going to make sure you follow up and build a relationship, a deeper relationship, and figure out how can you add value, and how can you have complementary skill sets, and is there synergy to do something together? The power of relationships and associations and referral is the way to grow your business. And I think that's, if you're getting into the world of real estate, there are no lack of resources. You have to show up. You have to be willing to put in the work. I was still working 5 to 6 days a week in my eye care practices, and I was showing up to all the multifamily events. If there was an event going on that I thought was relatable to what I wanted to do, I would show up. And once I joined a program, I was like, if I am going to invest in a program of this caliber, and I know there's high caliber people already successfully doing what I want to do, I don't need to reinvent the wheel. Figure out, how can I partner with these people, and how can I add value? And you just learn. That's the quickest way to learn. Don't go and just read books. Yes, there's resources in books, but if you can actually, like we did, invest with someone, and you don't have the money to invest yet, figure out a way that you can make a relationship with the people who are successfully doing what you want to do in the space that you're doing it.
Wow, that was all time. Some great information there. 3 to 5 action items from each conference or each event that you go to. I mean, that is just such a fantastic idea, because yeah, I feel like you go to so many conferences, or you read a book or this or that, and you think of all these ideas, but you don't actually put them down on paper. And I would recommend, find an accountability partner, send those action items over to your business partner, put them in your calendar, do something so it's there in front of you as you get back into your real life and you have all those tasks that are overloading you. And then you said, don't reinvent the wheel. I mean, that is great advice. There's tons of people out there that are successful at whatever you're looking to do. So go find those people and emulate what they've already done successfully. So great information there. Hoa, looking ahead, any exciting projects or plans that you have in store for 2023 or beyond 2023?
Yeah, so the most exciting thing for us is we're we're doing our first new land development project.
Oh, wow.
And so, it's 20 minutes north of us. It's in the fastest growing suburb here of Dallas. It's in Salina. And so, it's 21 acres, and we're so excited because they just had announced that they're doing the Universal Studio right here in Frisco, which is going to be 7 miles away from there. And so it's going to be a new construction multifamily, 336 units. And so that's a whole new space for us. We've always been in a pre-existing A-B class type multifamily is what we kind of have been our sweet spot in the multifamily space, but this is our first new development. And so the developer, he's been in business for 30 years. It's a space that I've been talking about wanting to get in for the past couple of years. But I've I wanted to focus all my energy on existing multifamily, and that's all we looked at. And then now we're finally open, and we've had the opportunity to partner and really learn the ropes and ins and outs of this. And so for 2023, that's what our whole energy is focused on.
That is great. Well, I'm super excited for you, and I mean, what a great space to step into right now.
Mm-hmm.
So, well, that's awesome. Before we head out for the day, any book recommendations that you have for our guests at all?
The books that I read are not real estate specific. They're more like mindset things. It's like I love, Man's Search for Meaning. I love Ed Milet's Power of One More, Tax-Free Wealth by Tom Wheelwright, Cash Flow Quadrant, Rich Dad, Poor Dad by Robert Kiyosaki. So they're not, they're a little bit more general things that I use to apply, but I find that they're really good books that I've really enjoyed.
Got it.
Yeah.
All fantastic options.
So those are the books I really enjoyed.
Perfect. I love it. All great recommendations. Definitely check those out. And Hoa, if people want to get a hold of you after this podcast, is there a great way for them to do that?
Yeah, they can get on our website on passivewealth23.com. And they can just fill out a contact information from there.
All right, perfect. Well, thank you so much for coming on the show today. I really appreciate it. Hope you have a great rest of the week.
Really appreciate it, Mike. Good to see you.
You as well.